Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at strategy.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. When you really look at this company, you're fundamentally dealing with a dual business model. It's not just one thing.
Right. It's basically two companies glued together.
Exactly. On one side, you have the core enterprise analytics software business, the legacy side.
And that's the stable part, the part that, keeps the lights on. It has really high margins.
Very high, around 70% gross margins, which is phenomenal. And they're shifting more of that revenue over to subscription services.
I saw that. The Q2 2025 subscription revenue was, what, $40.8 million?
That's right. So that's a healthy base. But the real action, all the volatility, that comes entirely from their other business.
Which is their digital asset holdings.
It's effectively the world's largest corporate treasury of Bitcoin. And that's what dictates everything now.
Especially with the shift in accounting rules. That was a game changer.
A complete game changer. The FASB fair value accounting rules mean their earnings reports are now just completely dominated by the price of Bitcoin.
So instead of just reporting it at cost, they have to market to market every single quarter?
Every quarter, which is why we saw such a huge swing. You had the Q3 2025 net income hit $2.8 billion.
With a diluted EPS of $8.42.
Yeah, that was their second consecutive quarter of these massive positive earnings.
And that kind of profitability is driving some really aggressive forward guidance from management.
Extremely aggressive. They've publicly reaffirmed their full year 2025 guidance.
They're targeting operating income around $34 billion, net income of $24 billion, and diluted EPS around $80.
$80. But here's the crucial part. All of that, every single one of those numbers, is anchored to a specific scenario.
Right. A $150,000 year-end Bitcoin price.
So they are absolutely leveraging that digital asset exposure and telling the market exactly what they expect if that target is met.
Let's talk about how they built that exposure. The financial foundation here is fascinating.
It really is. They have just aggressively built up their balance sheet. Through November 2025, they had accumulated, what was the number?
Between 639,000 and 640,000 Bitcoin, something in that range.
And they have a target reserve of $84 billion in the asset by 2027.
So the big question is, how are they funding this? It's not just from the software business.
No, not even close. This is where their financial engineering comes in. They built this incredibly sophisticated multi-tranche preferred equity financing strategy.
We've seen all those new tickers. STRK, STRF, STRD, STRR.
Exactly. They're raising billions of dollars this way. There was a $2.5 billion preferred equity offering back in July 2025.
And a 620 million euro preferred stock offering just this past November.
This strategy, this capital markets engineering, that is their real competitive moat.
Because they can issue this preferred stock and use at the market, or ATM, common equity programs, to just recycle capital directly into Bitcoin.
Right. It gives them this leveraged exposure without forcing them to sell their holdings to cover their obligations.
And they've been very explicit about de-risking their liquidity profile, too.
Very proactive. They established a $1.4 billion cash reserve,
which was funded through a common stock issuance.
And it was set up specifically to cover their total annualized dividend and interest obligations, which, total around $614 million.
So they have more than double the cash on hand needed for their annual obligations.
Which is huge. It minimizes that risk of a forced sale. They don't have to sell Bitcoin during a drawdown just to make a payment.
It's a massive cushion. But okay, despite all these strong fundamentals, this clever engineering, the stock has been under enormous pressure.
Massive pressure. It was down, 67% from its recent highs. It's just heavily correlated to the volatility in the digital asset market.
And that leads to this major conflict, this kind of disconnect in the market.
The disconnect is that the company is trading at a significant discount. Its market value is reportedly at or even below the net asset value, the NAV, of its Bitcoin holdings.
And usually a historic discount like that, it almost always precedes a mean reversion rally.
It should. But the negative sentiment is just so intense right now.
A lot of that is driven by the legal challenges, right?
Absolutely. There are multiple securities class action lawsuits that have been filed.
And they're alleging that the company overstated the profitability and, more importantly, understated the risks of this strategy.
That narrative really took hold after they recognized that $5.91 billion unrealized loss in Q1 of 2025. That was a huge red flag for the bears.
And then there's the index risk. You can't ignore that.
No, you can't. JP Morgan has voiced concerns about the stock potentially being removed from the MSCI indices.
Which would be a big deal. That could trigger huge passive outflows from all the funds that track those indices.
It creates this downward pressure that has nothing to do with the company's actual performance.
But there is a major technical counter signal here, something that, often signals a bottom.
You're talking about Jim Chanos.
Exactly. The news that the prominent short seller closed his short position in late November.
That's a huge signal. When a major short capitulates, it often means the easy money on the downside is gone.
And it sets the stage for a potential short squeeze.
It really does. It suggests that even the bears are struggling to justify the price at these levels.
So let's look ahead. What are the near-term catalysts over the next 3 months that could break this stalemate?
Okay, the next major event is the Q4 earnings announcement. That's scheduled for February 5th, 2026.
And that's going to give us updated guidance.
And critically, details on how they plan to deploy that $1.44 billion reserve. The market needs to see a clear plan for that capital.
We also have a few things coming up right at the end of December.
We do. The first preferred dividend payment on those new STRE shares is due on December 31st.
And on the exact same day, the EVP and General Counsel is retiring.
So you have this confluence of events. Management succession and capital allocation are going to be under a microscope. Any sign of instability will be magnified.
Then in January 10th, 2026, we have the ETF rebalancing.
That could drive significant institutional flows one way or the other, depending on how those new preferred equity classes affect the index weightings.
So when we think about risk, volatility is still number one.
It has to be. The stock has a high beta, 3.37, so the swings are just going to be amplified.
And investors also need to keep a close eye on those class action lawsuits.
And any official announcement about index inclusion, that could trigger some very large, very fast institutional moves.
So what's fascinating here is just the asymmetrical opportunity.
I think so. You have this high-margin software base providing a floor.
Supporting a highly leveraged digital asset treasury.
That is currently trading at a discount. A discount driven almost entirely by fear around legal and index risks.
If the price of Bitcoin even starts to move toward management's target of 150,000, that NAV discount could close really, really fast.
Absolutely. It offers a unique kind of structural alpha that other, more direct Bitcoin products just can't replicate.
If you found our breakdown of strategy useful, please remember to subscribe and leave us a comment below. We appreciate your support.